Hey, good morning, everybody. It is Saturday morning, and this is Multifamily Unplugged. Welcome to the show this week. I hope that you had a great week, and I hope that holidays have been awesome. The other thing I want to talk about, you may or may not know, my new book came out, Multifamily Investment Secrets, Your Explosive Guide to Multifamily Investing. And this hit Amazon's bestseller list in 7 categories domestically, 3 categories internationally. So if you're a new investor or somebody who's been in the business for a while and you're looking for some tips, some golden nuggets, some things to help you kind of scale your business in the new year, grab a hold of that and read through it, because I know that a lot of stories, a lot of testimonies are encouraging, but will give you some direction, and maybe you pick up a couple things that you didn't know before. So, hey, if you're new to the show, welcome. I'm glad that you're here today. Remember, hit that subscribe button, because every week we're bringing you a new guest, some new information, talking about multifamily investment strategies, talking raising capital. So glad that you're here today. Hey, I'm excited. My guest this morning is Ken G with KRI Partners. They're out of Cleveland. We're going to talk about private equity. We're going to talk about scaling your portfolio, raising capital. So we bring Ken in. Ken, hello, good morning. Sir. How are you?
Good morning. How are you?
I'm great. Good to see you again.
Yes, sir.
I think before the show you were saying it's snowing in Cleveland.
Yep. Unfortunately, it's that time of year. It hits us hard.
I liked your comment about we like Florida because it's warmer.
Yeah, we do. That's why we buy our assets in Florida, right?
Yeah.
That's the wonderful thing about this business. You can do it wherever you want.
Yeah. One of the things I learned early on, I did my first syndication in Chicago ever, and said, boy, I'm not going to make any money in this market, and I might as well go somewhere where it's warmer and I don't have to deal with snow and snow plows, right? So
that's right.
We wound up in Texas, Florida, and Alabama, and all the Southeast, right? So
that's right.
Hey,
you're
Ken,
not the only one does that. That's a great idea. That's exactly
right.
what we do.
Yeah, absolutely. One thing I always like to start my show and ask one question, and I do this because I'm going to eventually write a book on all the answers. But one question I always ask is, in one word, what best describes you personally and professionally?
Yeah, that's a great one. I would say probably discipline. Probably more so professionally than personally, but a good part of my professional life has been built on discipline.
Okay. And do you think you've always been disciplined, or is that something you've learned over the years? Or
no, I wish I could say that I was disciplined early on. And in real estate, I've been super disciplined because I'm a CPA by background, commercial lender by background, and I've seen a lot of things. So that's kind of made me realize you really need to stay disciplined. But no, I would say that it's interesting. Early on in my life, I didn't think I was very detail oriented. I just didn't like I was, not at all. All of a sudden, now I found myself to be a CPA. Everything we do is detail oriented. All of our success has been because of these details, right? And it's funny to see how you evolve over your life, which is proof that you can become something you're not. You just got to focus on it and do it, right? So yeah, that's why I'm that way now.
Absolutely. And I think, we're in a business where we need to keep a good mindset, right? And I firmly agree with you. I think discipline is part of that mindset. And, you gotta, I always like the expression, relies on the repetitious rhythm. You got to do the same thing over and over again every day, no matter how boring it gets, right?
Yeah, you're exactly right. That's why we do what we do. That's why we stay in our lane. You're exactly right. Yeah. It's always about details. You look at anybody that's ever successful in business, it's because they understand the details of their business, which is typically the routine, mundane, boring stuff, but it's what actually makes it all work. At least that's what I found.
100%. That's for sure. Well, listen, why don't you tell the list a little bit about you, your background, how you got doing what you're doing and what you're doing now?
Yeah, it's kind of a crazy story. So I grew up in Toledo, Ohio. That's in northwest Ohio. I got my undergrad from the University of Toledo. Then I moved to Cleveland. I became a commercial lender for about 5 years while I went to school at night at Case Western Reserve, got my graduate degree. All the time I was at the bank, all my customers, I wanted to help them. They kept telling me, Ken, I'll go talk to my CPA. Thanks, appreciate the offer for the advice, but I'll get it from someone else. And I thought, well, that sucks. I wanted to be that guy. So I became a CPA, went to work for Deloitte for 7 years on the tax side. What I didn't tell you was while I was a lender, all my clients did real estate. Everybody did. Wealthy people just do real estate. Then I went to Deloitte. The Cleveland office had a massive real estate practice. Like if I mentioned the names of the people that office served, you would know them. They're household names, extremely wealthy people. And so what happened when I was at Deloitte, my family was young. I used to do my daughter's feeding in the middle of the night. It was all good, right? 3 a.m. It's really nice, quiet time. Mom needed a break. Dad, daughter. I mean, how do you beat that, right? And until I realized, wait a minute, Ken, you dummy, this is 3 a.m. and this is the best you're going to do for your family. Like that didn't work. I got frustrated because I had done everything I was supposed to do, went to school, got good grades, got a great job. I was doing well. And then I just realized 3 a.m. is the best I could do for my family. So I set out about this thing. I had to change this. And I had been around so much real estate. I said, you know what? I think real estate is where I should be. I got to figure it out. Right. And so back then, right, we're talking 25 plus years ago, there was no podcast like this. No, that stuff didn't exist. So I had to go to apartment association meetings and try to network. And it took me about 1.5 years. Learned a lot, not as much as I needed to learn, but I did buy 3 small buildings, sold them 3 years later, made $500,000. That was then. I'd realized I just made more money on the side in real estate than I had up until that point. The whole time I was at Deloitte at this big firm, being Mr. Cool CPA, I said, you know what? I got to make this my life. And I did. That's how I got into it. Kind of a crazy, I mean, I needed to change my life. That's what drove the bus here, is I didn't want my family. That made me sick to think that my family was going to grow up and I wouldn't get to be there to see them grow up because I was working too much.
So did you make the switch into, multifamily investing because you were looking for that time freedom aspect or?
Yeah. So there were a lot of things, right? When you're working, Deloitte's a big company. It's an awesome company, but you're into the corporate stuff, right? There's a lot of little politics and things that go on corporations I just didn't feel like I was very good at. So I was worried that, one wrong move, I could screw up my career. And it kind of bothered me that other people could control my career. And further to that, those same people really controlled your life. I mean, I can remember a couple of times where a partner said, hey, I need you to go to dinner tonight with a client. I said, okay, but it's my anniversary. I said, I don't care. You're going to dinner with me with the client. I thought, man, that sucks. I had to call your wife and say, sorry, I got to go to dinner. I know it's an important day, but too bad, right? So I was escaping a lot of that stuff. And again, I'm not dissing Deloitte. Deloitte's a wonderful place to work, but I didn't want that for me. I wanted to be in charge of what I did, when I did it, how much money I made. I felt like if I screw it up, then it's on me, right? And that's why I pursued it. That's why I went after real estate. And I knew a lot of people made a lot of money in it. So I knew that if I did it and I did it right, it would serve my family well. And it in fact did.
Yeah. Awesome. So what are you guys working on today?
Yeah. So we've matured as a firm. So first 10 years, we didn't really raise any money. We did all of our deals in Cleveland just with our own money. And then about 15 years ago, I said, man, what if we did this in a market where people wanted to live? So we went down to Florida and we felt like 10 years of experience. I think I know a little bit now, and I was comfortable getting someone else's money. So we started the syndication game, did that for a number of years, and then finally came to the realization that if you've ever tried to buy a property in Florida, you're one of like 20 or 25 people bidding on that property. And so they're all syndicators. So now how do you differentiate yourself? Well, you can't unless you pay up. And we did that for a while. And I thought, you know what? I understand private equity. We need to go raise the money first and then go find the deals. And that's what we do now. We're on fund number 4. And we've got about $17 million to deploy. And we're now in the state of Florida, we're a strong buyer because we have the money in the bank ready to deploy. We're now separated from syndicators, right? That's just the natural evolution if you want sellers and brokers that take you seriously. So that's what we're doing. We're sticking to multifamily. We're going to stay in our lane, and we're just rinse and repeat this process that we have fine-tuned over the years.
So are you paying cash for properties, or are you levering them?
Yeah, we're so right now, as we record this, I mean, that's an issue, right? Interest rates are an issue. So we're using low leverage to no leverage. It depends on the deal, but low leverage. I don't want debt to be an issue for closing. So if you just keep your leverage low enough, though, that doesn't mean we're going to pay up, right? We're still going to pay at what, basically we want even leverage going in based on current interest rates. And so if we just go in low leverage, we can get the deal. And at some point, rates will come down, coupled with the fact that we will move rents because that's a requirement in every one of our deals. So between those two things, we'll be able to refinance and get a good chunk of this capital out when things turn a little bit, maybe in 2 to 3 years.
So are you doing fixed rate debt today?
Yeah, I'm when it comes to debt. So remember, if you do the math, I've lived through 08, 09.
Yeah.
I've seen you got to be careful with debt. I am always conservative. So we almost always use fixed rate debt. I would much rather hold a property a little bit longer than I want to than be in a situation where I can't hold it because I screwed up the debt and it's mature and I can't refinance out of it. So, yeah.
Yeah, I feel the same way. I think a lot of challenges we see today are from floating rate debt and bridge loans and loans that, where you got buy downs that get so expensive here and there's no cash in the deals anymore. And
That's right.
even at 6.5%, 7% interest, fixed rate, at least the rates are going to come down, and 3 years, 2 years, you should be able to refinance and restructure those deals.
That's right. Yeah. And we're not up in the 7% range at any of our deals, but when you keep leverage down, spreads go down. So it really, we're usually sub 6. I know rates have moved recently a little bit, but we're plus or minus 6 usually.
Okay. And markets in Florida, do you like?
Yeah, so we like I love the West Coast. I love Tampa, the up and down that whole coast. I love that. We've got deals in Tallahassee. We've got a deal in Winter Haven, so that's central. Right. We want to be in South Florida. We're not there yet. We're in Daytona. We've been in Jacksonville, so we've been all over. If I were to rank them, I love Tampa. That whole area, yeah. Tampa, St. Pete, Clearwater, the best. I mean, it's just amazing how that area has just got so much going for it that you continue. There's no reason that anyone would not want to move to Tampa. At least that's my opinion.
Yeah. I got a buddy been in the business as long as I have, and they're a big group, and he said, man, I'd be buying anything in Florida or in Tampa to Orlando today that I could get my hands on. So it is a great market. How are you dealing with the continual insurance issue in those markets, Florida?
Yeah, so that's a great question. I mean, we just have to underwrite it. Much to your surprise, I'm going to tell you that a deal that we just renewed property on November 1, which was not too long ago, and we actually got a 25% reduction and better coverage. So what happens in the insurance world is it goes in cycles. And what happened was it got so low that everybody beat each other up, right? Drove the price down. Then we had a bunch of losses. Everybody lost their shirts. They all vacated the market. So now capacity went very low. When there's very little supply, what happens to price? Shot up through the roof. Now for a couple of years, insurance companies have literally printed money. I mean, they literally put people into policies where, you bet a better chance of winning the lottery than you do of them paying on a claim with the deductibles and all that others. I mean, they're literally just printing money. And so now they've been fortified. And even with the last couple of hurricanes that went through, the second to the last one, that was mostly a flood event. And that doesn't impact them. That's FEMA. And then the last hurricane didn't really impact them that much. So they're well capitalized now. And so now rates are starting to come down a little bit. I mean, we were obviously thrilled to get a 25% reduction.
Yeah, 100%. I know that, we bought a deal in Tampa in 21, and I always use this as an example. Going in, we're at like 950 a door. I mean, and last renewal, we're at 200,
Yep. Yep.
and now our broker says this renewal period, we should come down. So we'll see.
You will.
We haven't had any claims, but they make it difficult to put a claim in, right? So
That's what I said. They're printing money, man.
yeah, deductibles are high, and you've got wind and hail damage deductibles, and it's it's very interesting. What are you experiencing right now in that Central Florida market rent wise? Are you stable? Are they going up? Are they coming back down? What are you seeing on rent?
Yeah, it's stable to increasing. We're now, I would say, I think in the fall is probably when it about bottomed out. If I were to make a general statement, and now we're in really, I feel like we're in really good footing now. And this first quarter, I mean, we're moving rents, depending on the property, some more than others. But we just closed on a deal in St. Pete, 102 units, brand new, right out of lease up, and we're moving rents a little over $100 a unit on renewals and new move-ins. So there's upside there because Tampa's growing, right? It's demand supply. If there's more people than housing, I mean, you're going to have the benefit of increasing, having the ability to move rents, as opposed to where I came from in Cleveland. It was the opposite. Trust me, it was very hard to move rents.
Sure. How about asset class? What are you buying C product? What product class are you really focused on?
Yeah, so what always happens, and I've watched people go through this cycle many times. You start off in the lower C class, heavy value add, and you just start ratcheting up the asset quality because I don't know, maybe you just get tired of the pain and suffering. I don't know operationally, but we need good neighborhoods. We prefer higher quality assets, newer assets for lots and lots of reasons, because we still adhere to this value add concept, which throws everybody for a loop because they're thinking, how could you add value to a brand new property right out of lease up? Well, we are. There's still things that you can do to move rents, and we are doing that. It doesn't mean you need to spend $2-3 million. I mean, we're going to spend on the Levi. I think we'll spend a couple $100,000 and really make a difference in terms of how the renter pool sees that property.
Right. Yeah. I agree with the trend. The process, right? You get in this business, you're buying C-class deals, value add, going in, and you get tired of that after a while. And, any new investors listening in, take heed. That's the best place to start. That's where you really can cut your teeth. But then all of a sudden it clicks for you that, hey, listen, do a little bit better in an asset class, have less issues, right? Less problems. And so, and I think even if you're an experienced operator and you're doing B&A deals, that, you drop into a new market, you might buy some problem deals in the beginning to get a footing in the market, because it really kind of gives you a sense of operations, tenant base, demographics, and then you grow from there, right?
Yeah, no, you're exactly right. I agree 100%. Yep.
So one of the things I like to talk about on Multifamily Unplugged is raising capital. I'm kind of, when you said 17 million in a fund, I was like, wow. Are you guys raising capital? Is your group raising capital from private investors, family office, institutional? Where did your capital come from?
Yeah, all private retail.
Okay.
Yeah. We've had lots of offers for not institutional, but family office and things like that. But, I go back to the reason I got in this business. And that is think about it. If one person writes the whole equity check or 90% of it, well, you're really just working for them, right? I mean, you are. It's not your own business. It's not your own thing. And so we've always resisted doing that. I'm not saying there's anything wrong with it. It's just not the path that we wanted to choose. So we've, cast our net wider, and we've had about, I think in total, probably 350, 370 investors in our funds over the years. We've raised about $47 million. So it is I find that we actually have the biggest impact on those people, right? Because if you double their money in 3 or 4 years, I mean, they're just ecstatic, and rightly so, right? I mean, we've actually really helped them. So, we like to hear the stories where the investors took the profits and went on this, amazing vacation, or we had one guy buy his son a home from what he made off. I mean, that kind of stuff matters to us. At least it matters to me. So yeah, that's what we do. It's a little harder to raise, money 100,000 at a time, but I think overall in the end, it's rewarding because those people continue to come back and you just grow your investor base.
Yeah, 100%. So how are you going about that? Do you have a big database? Are you doing ads? Where's your best sources of new investors, current investors coming from?
Yeah. So now, I mean, it's all of the above. So what you don't know about our firm is we're here to help people create wealth through real estate. Some people want to do their own deals. We have an entire education side of our business where we have an underwriting program. We have an advanced multifamily acquisitions program. It's designed to help people do what we do. And so a lot of those people, as you spend a lot of time together, they end up investing with us. That's a huge source. The other source is just general advertising, right? So, people are looking for a place to put their money where they're trying to earn, mid-teens annual returns. That's what they look for. So we get it from Revert. What happens is this thing just starts to grow and just slowly continues to expand. And that's what's happening now, right? We get a lot of referral. We do a lot of webinars. We do a real deal webinar once a month that talks about, that's an investor base, talks about our portfolio, what's going on, what is our occupancy, what is our insurance cost, like real stuff that nobody ever shares. And then we have another webinar that's more of an educational webinar that gets into the nitty gritty of about how do you do what we do. And so those webinars, people really like to come to those. And over time, they learn these people are for real. Like I can trust them with my money, and they start to invest, right? Very similar to one, you might get a lot of publicity from your podcast here, right? People get to know you, like you, trust you, and they're like, I like this guy. He knows his stuff. And it's exactly
well, I might not know my stuff, but guests do, just like you.
I suspect you do. I suspect you do.
Hey, I think that happens over time. That's the other thing, right? I spent 15 years on the residential side and thought that it would be an easy transition to go in the apartment business because I understood, you raise private capital, you marry it with a great real estate deal, you stay in the middle. And as soon as somebody said NOI or yield maintenance, I was like, what? Because we don't talk like that in the residential side, right? So,
yeah.
But yeah, you learn. And I think you learn by taking action, right? The more action you take. Hey, let me ask you this. So, go ahead. I'm sorry.
I was going to say one of the biggest group of people that come into our educational programs are people like what you just described, right? They've done a lot of single families, 1 to 4s, and it's a grind, and they're doing well, but man, they'd really like to multiply that. And so they come into our education side because you're right. It's not hard. You've already got a massive head start because you already understand real estate, location, and all kinds of stuff. You just need to learn the things that are different about multifamily. And once you do that, those people just are massively successful because they have this huge base underneath them that somebody really green, they never have. So as it turns out, I call them house flippers, right? But it's the biggest source of people that go into our education programs, and they're wildly successful because they're not afraid. Making an offer is not a big deal. They've only done it 10,000 times.
Right.
You know what I mean?
So how do you attract those people to your educational platform?
Webinars, advertising, people, it all comes down to being legitimate about wanting to help people. My kids are now grown. Remember, I told you my daughter, that was 25 plus years ago. They're grown now. So my wife and I, we just stare at each other. So we don't have anything else to do. It's hard for me to impact my kids. They're not around anymore. And so now I've realized, and a few years ago, I would have never dreamed this, but it is massively rewarding to be able to help someone change their life. And real estate has obviously changed my life. And it was possible because of a guy who helped me 25 years ago, right? Well, now I can be that person, right? Our Levi deal, for example, we have a 25-year-old kid who is our 20% partner, who went out. We helped him go out. He went out. He raised money for 20% of the. We could close the deal without him, right? But he was in our partnership program. That's part of what we do. And I'm like, go do this, right? You have the safety net underneath you. Go out there, go do your PPM, go raise the money, knock yourself out, go for it, right? Go through the whole process, right? That's massively beneficial when you have a fund underneath you that already has the money to close if you totally screw it up. So obviously he didn't. He did quite well. He's got 20% of a brand new deal in St. Pete. Like, who wouldn't want that? You see? So I now am proud of the fact that I've actually, I believe I've had a role in changing his life. He's on his way. He already owns $50 million worth of real estate. It's ridiculous.
Yeah, I think that's an awesome model. And I kind of have a spin on that myself, right? I mean, every deal I'm in today, I'm in with a coaching client that I was, working
There
with.
you go.
And
Yep.
my philosophy, and it sounds like yours is the same. If you teach somebody how to fish and let them catch that first or second fish, right? You really help them grow and be able to go to the next level.
And you can be proud of what you've done. At least I am, right? I didn't understand what that would feel like until I did it. And I really underestimated how rewarding it was.
Right.
And this is what really, I know you know exactly what I'm talking about. Because now you can
100%.
go home. My kids are proud. They're like, man, Dad, you did something good for these people. I'm like, yeah,
100%.
That feels good. Right? That's what you want.
Yeah. So if you were talking to a brand new investor today and teaching them how to go raise capital, give a couple tips or pointers that you would point that investor in the direction.
Yeah. So here's what I would say. And a lot of people don't want to hear this, or they don't really understand it. What's the number one reason people invest with you? Because they trust you. They trust that you know what you're doing. How do you make that happen? You've got to go out and figure this out. You've got to go do the details, right? Our lead program is our underwriting course. Obviously, CPA, lender, I might know something about underwriting, right? And numbers. But here's what happens as people learn how to underwrite. When you're on an investor call and they say to you, well, why is payroll X? Why are the expenses this? Why this? Why that? Well, if you know the details and you understand how to underwrite, guess what? You can answer those questions, not only with an answer, but why. As soon as you're able to tell a prospective investor what's happening and why it's happening and why you are able to make a legitimate case, right? They sniff out people that didn't go deep. They know what that starts to look like, especially after 2021, 22. There's people losing money right now, and they're like, oh, I know what that looks like. I'm staying away from that. That is the number one thing that will dictate your success raising capital, because you can miss on the other things. But if the person across from you, mostly on a Zoom call, realizes that you know your stuff, you know exactly what you're doing, and you're not BSing me, then I trust you. That's how you raise money, right? At least that's how I do it.
Sure. We're in a business of trust, right? And transparency. So we have to be more transparent than the normal person, right? How about your company as far as transparency? How do you report? How do you communicate with your investors?
Yeah. So if you go to our website, you will see our entire track record, all 27 years of it, on our website. Now, that's great, right? Everybody is willing to do that, except we hired a third-party company called Veravest, and we had them come in, paid them a ridiculous amount of money, and they audited every deal. I had to send them bank statements, settlement statements, you name it, tax returns, all that. It was horribly painful. But when you look at our track record on our website, which then you can link out to their website, obviously I don't have any control over their website. Who has that level of transparency, right? That was really important to me. Remember, I'm a CPA by background, commercial lender by background. I have this cynical, I want you to be able to trust me, but I want you to be able to verify me. So most individual investors are not going to look through all that. They just never will. Nobody would ever do that. So that's why we hired them to do that. So then when you're in our deals, first of all, we do our once a month real deal webinar where we talk about exactly what's going on at each one of our properties, occupancy, insurance costs, number of leads. I mean, all the little stupid details that nobody shares, we share. You have the ability to ask questions once a month, every month. And then quarterly, we do all the financials, P&L, balance sheet, rent roll, and then a narrative, right? As if the webinar wasn't enough. Now you're getting it in writing, goes into our portal. It's there for you to look at whenever you want. So transparency, I have 4 rules that I want people to follow when they vet us. I want them to insist on experience. I want them to insist that the firm have a track record, but not just any track record, a track record of going full cycle on deals and proving that they make money. So that 14 out of 19 times. I want them to be transparent. We just talked about that. And the last thing, you haven't this yet, but this is the thing that will help you raise money, is to put your investors first. Don't screw around with all these fees. Don't make ridiculous fees. Don't make crazy, hard to understand waterfalls and carry interest percentage calculate. Don't do that. Don't do that, because investors don't understand it. They don't trust it. And the reality of it is we're 1% across the board on our fees. Like, that's low. And we're at 820. Like, I don't know how you get much lower than that. And it's that simple. We're done. That's it. That's what you need to know. There's nothing, anything like that. See, that if you do that as a sponsor, you're putting your investor first, right? You win, I win. It's not like I'm getting a 4% fee and you're getting nothing.
Yeah, I love that model, right? And I love the fact that, no waterfalls, right? Because an investor already is complicated with an 80-20 and, when you start to add a waterfall to that, all of a sudden becomes even more complicated, right? And so that old cliche of, KISS, keep it simple, stupid,
Yeah. So think about this. Let's say you have a half hour with a prospective investor and you spend 20 minutes trying to help them understand this waterfall. You spent almost no time talking about the actual reason you're talking to them. It's about the deal and how they're going to make money. They're trying to just figure out how you're getting them, right? There's a gotcha somewhere. They're trying to figure out where it is, and you just made it really hard. And the reality of it is, you are not, if you're the sponsor, these crazy waterfalls are not going to net you much more money. Like, why are you doing this? It doesn't make sense. It's not worth it.
Yeah, 100%. Hey, how important is it for a capital raiser on your team to know how to underwrite or to have an intimate relationship with the numbers?
They have to. Otherwise, the investors are going to ask them questions and they're not going to know the answer. Now, it's not just me anymore, right? There was a time when it was just me and I had every investor call, but now it's not just me. So every day we do real estate training with our people on the phones. But here's what's important. Any question that they don't think they understand, they come right to me, because I do know all the answers, not all the answers, but I'm the one that knows, and I'm the one making the decisions. And if that means that they grab me and say, "Hey, Ken, I'm on an investor call, hop on," because they have a question that I don't know the answer to, that's what we do. And it is important, but remember, they haven't been doing this 27 years. They haven't done 19 deals. They don't have that same level of experience. So what happens over time is, as you continue to train them up, my involvement is less and less, but I always am there for them, because I want our investors have my cell phone number. And if they have a question, they just call me or text me and I'll call them back, because that's the way it should be, even with 350 plus investors.
Yeah, I always tell people it's really important, even if it's not your job, but you need to have the intimate relationship with underwriting so that you can convey that message to the investors. So it sounds like do you have some telemarketers on the phone that are cold calling or talking to investors, or just investor relation people, or?
Yeah, I mean, they're client. So what happens when you come into our ecosystem, the first thing we got to figure out is, are you somebody who wants to do your own deals? Or are you somebody who wants to do passively? Most of the time they're both, but you got to figure out what the person that calls you wants. What are they trying to do? and then we steer them in the direction. Usually it's at least some education, and you almost always turns into passive as well. So we don't cold call anybody, right? People come to us from, we've got a couple books out that we offer for free. We've got a free underwriting webinar. We've got a free, I call it a multifamily masterclass, that just go to that. If you're interested, we'll call you, let us know. We'll call you and talk you through it and see if you're right for it. I mean, I would never just start picking up the phone and calling. That will be like the slow road to nowhere. But so people call in, they're at least interested. But
Right.
What's really important is that you hold the line on your integrity and figure out what they're trying to accomplish, and then put them in the right vehicle. That's what's really important. And that's where you got to ask some hard questions, about what they're trying to do, and be realistic, so that I want them to succeed, right? I don't want to put them in our training program if, they're a physician, they're working 90 hours a week, they're making millions of dollars, and there's no way they're going to give that up to be a sponsor, right? They're just not. So maybe they should learn enough to make them educated, maybe like the underwriting class, so they understand the numbers, and then let them be passive, right? So every person, that's what we go through that process. So our team is more like a client success team. It's not really a sales team. It's not, we don't know when that call comes in, where it's going to land. Is it going to be passive or active, or both? Because we don't know what they want yet.
Right. That's awesome. Great philosophy. Hey, I appreciate being here this morning. How do people get a hold of you if they want to learn more about you, your company, maybe do some investing or educational work?
Yeah. So just go to kripartners.com. So KRI Partners, that's plural.com. And like I said, you're going to go one of two directions. I would strongly encourage you. There's a lot of free stuff on our site. Go to the investor education, just do some of the free stuff. And if I do free stuff, I do all the content. I don't farm that out to anybody else because I can't. It's my company. It's my show. And if there's something that, you think there's maybe a fit that you like what you hear, then reach out to us, right? We're not going to hunt you down. That's not what we do. So kripartners.com, that's the easiest way.
Awesome. Thanks, Ken. I appreciate you being here. I'm going to move you out for a minute. If you hang out in the back room, I'm just going to say goodbye.
All right. Thank you, sir, for having me. I appreciate it.
Thank you. Hey, everybody. That was a great episode this morning. I'm glad that you were here. Somebody invited you to this show. Please make sure that you thank them. Come back again. We're here every Saturday morning. My guest, Ken G with KRI Partners, a little bit of education, a little bit of private investing. If you're somebody who's looking for another twist, give him a call and pick his brain a little bit. If you are somebody who is looking to get into multifamily, if looking to build your business or scale your business in the new year, reach out. Would love to talk with you, give you some insights, a little bit on our journey and what we've done here and how we might be able to be of help. I just want to wish you a week and a happy new year. Enjoy your family, enjoy the new year, and be intentional about what you do and how you grow your business. Take care, everyone. Talk to you next week.